The bearish trend persisting on the NSE. There's this lukewarm attitude, it seems, towards equities right now. What stance have you adopted towards the equities arena?
Good morning, Alishia. The real side that investors are just putting towards equities right now is one of caution. There's been a lot of concerns, concerning what is happening on the exchange itself on a broader level, also concerning the banking sector, more so with the outcome of the NPR meeting that suggests that sort of environment that provided free funds is about to be altered. So we have that affecting banking sector in particular. We also have the uncertainty really about the political environment in conjunction with other factors affecting the broader market. So, I think that's what's been accounting for a lot of the pressure that I've been seeing over the last few weeks. For us, really, yeah, go ahead.
Well, with banks still the prime topic, let's look at the risk that's inherent here with the likely divestment actions by banks coming to the fore, moving away from the universal banking model and possibly causing further depletion on investment. What's your overall view on the sector, given that there's all of this playing out simultaneously?
We don't think that, it's something that should cause a lot of panic for investors, really. For the most part, for the big banks that have a number of the subsidiaries, those subsidiaries have not been very critical to both top line and bottom line, except for one or two of them that have very strong franchises in specific niches for their subsidiaries. But for the most part, I think those subsidiaries have basically been just leveraging on the parent body, on the parent body, and I think for a lot of them that are seeking to focus, it's almost a natural, logical step for them.
So let's use Guaranty Trust Bank as a case in point here, because of course this is the bank that's been leading the pack, and it's already notified the NSE of its intentions to divest from GT Assure. Are you looking at it from GT Bank's perspective as a lessening of risk and no impact on that bottom line, or no significant impact on that bottom line moving forward?
Yeah, I agree. It's a lesson of risk because you're involved in sectors through the subsidiaries that you're basically not deriving much from in terms of benefit. So in terms of the extent, broadening the sort of scope of the activities as well as their risk, I think it lessens it. It concentrates the activities, gives them focus, and helps them to stay on their brand of banking, which they've proven to be very good at over the years. Like you rightly mentioned, the contribution to bottom line from those subsidiaries has not been very significant. Yeah. For the subsidiary that seems to be more in line with their operations, which is the homes business, it looks as if they're trying to subsume that into the bigger banking, core banking business. But for the asset man, the assurance, the GTA, they're just looking to let that go because there's a lot of challenges, and so far they've not really been able to create or tap into the sort of value that sector seemed to have portended over the last few years. Yeah.
So that's the move when it comes to Guaranty Trust Bank, or that's the strategy that Guaranty Trust Bank is coming to the fore with. On the flip side, we've got a player like First Bank, certainly focused on more than just commercial banking. So possible talk of a holding company coming to the fore in that regard, as opposed to it divesting from its subsidiaries. What are you making of that speculation that's out there?
It's interesting because of the top four banks, it's perhaps only the First Bank that has opted to adopt that approach. And they've been very proactive about it. The first time the CBN came out with that guideline, they already made it clear, that was a model that they were going to be adopting. It's a bank that's always had a very large footprint in terms of retaining the big size. We don't think that managing that is going to be a problem. Perhaps they have looked at the sort of trend where other top tier banks, apart from GTB, Zenith and UBA, have been scaling down their subsidiaries, and they think that perhaps they have the opportunity to consolidate whatever they could within all those spaces. So it's quite interesting, for them, and we will be watching out for how effectively they're able to deploy the strategy that they intend to approach. Yeah. Because when you then have a lot of the other big players come out of those segments, perhaps a single player with a dominant footprint will be able to make more from some of those sectors as opposed to the fragmented situation that we had before. So they've been very clear about that.
Yeah, while all of that plays out in the banking sector and where we've got investors looking to find value, let's take a look at what this possible divestiture from some of the major banks in the territory could mean for the likes of your insurance players moving forward, because this could mean a very big opportunity for them, couldn't it?
Yeah, it could. Because it will just be a follow-through from what we're discussing about First Bank in terms of the fact that you have big players who have been leveraging off the brand of their parent companies, then coming out of that space, leaving whatever opportunity that is still existing for other players to tap into. So for players who are already big in that sector, we see them being able to tap into the sort of space really that's being created. More so when regulatory developments within the insurance sector in particular have been kind of favorable in terms of creating a solid playing field, ensuring that those insurers are not bearing unnecessary risk relative to the premium they've been taking, and also making sure that they are able to sustain their operations, over the medium term. We think that the regulatory changes have, sort of created an enabling environment, coupled with the fact that you're having a lot of the big players which had been dominating, living within that sector. We think it portends a lot of opportunity for.
We know that many of these these players are sitting at very low multiples right now. What's looking like good value right now if you had to make a stock pick out of the insurance sector specifically?
Well, like you said, a lot of them in terms of valuation look clearly attractive. But for that sector, we're looking beyond that really. Specifically, we have our sights on the likes of Continental Re, on the like of Custodian, on the like of GTA as well, to mention some. And for Custodian, really, gross premiums as at Q2 was about 4.4 billion, a 53% rise from the previous year. PAT also up for 3%, largely on the back of a strong oil and gas business, which they've taken care to nurture and develop over the years. And I think that's what investors have been responding to. Really, the share buyback that they did also had sort of positive impact, but it was not really a major buyback. If you look at the comparison to their total shares outstanding. Continental Re as well, strong actuarial processes, a footprint in oil and gas as well. The reinsurance business as well, it's perhaps the only one, which also gives it some sort of a niche advantage.
Well said.